to what its advocates or proponents would have expected or would have preached. So leading up to the market crash in the S&P 500, gold was hanging just around the sort of 1800 level, and it was looking pretty strong, and then all of a sudden, it had that market sell off, which it was not immune to. So in the time since the peak selling that we've seen, again mid-March, what we've noticed in the last couple of weeks is a lot of these supposed safe haven markets, they've bounced right back. So gold has, it made almost you could describe it almost as a V-shaped recovery, rather sharp one. And we've seen something similar with Bitcoin. Arguably, one could have said that Bitcoin had broken a major uptrend support line, that extended all the way back to, it began probably around 2016, depending on how you draw the uptrend support line. But basically, it had broken briefly around mid-March, and during that break, obviously a lot of bears would have pronounced Bitcoin dead, or would have at least opportunistically looked to short it, even on a short-term basis, just around the sub 4,000 level, when it had briefly broken beneath that. But for those who still watch Bitcoin, you would have noticed that it's roared right back to, as high as above 7,000, 7,200 or so, just as of about 2 or 3 days back. And so, it's particularly, I guess, shocking to those who are new to technical analysis. If you just take some of those rows around technical analysis, such as, uptrend support line breaks as gospel, and you immediately short on that first, generic sell signal being triggered, then obviously things get very painful. Once you realize, okay, well, I'm kind of caught here in this short position. But technical analysis isn't meant to be overly simplistic, to the point where you only rely on one rule. And so I've always looked at technical analysis or pattern recognition from, the more holistic angle, which I adopt with, my own trading, where I'll look at a variety of indicators. And so, that's kind of, what I would recommend for anybody who's just looking to get into trading, or anybody who's even experienced as a trader but not using technical analysis sufficiently, or in the way that I have written about. I would obviously recommend anybody to at least weigh in with their views of how it's done. I can always be reached, but I have a bit of sort of experience just seeing how it can work quite profitably, when interpreted a certain way, or at least, at the very least, even if one is not looking to maximize returns, at the very least, ahead of market crashes, you can certainly get warnings from the way I use technical analysis. And one instance of that would have been a newsletter post I made public just one day before the S&P 500 peaked out. So February 18th, on Bloomberg, Refinitiv, and FactSet, basically all these institutional channels that pump out my content, they would have made available to some of the world's biggest hedge funds, warning that the S&P 500, the NASDAQ, was vulnerable. And I actually had a short call issued February 18th on those markets. Subsequent to that, I again, through my approach to technical analysis, I made a call on the VIX basically being ripe for a collapse. And so at the peak of the equity market selling, right around March 18th, 19th, I noticed the VIX was at an all-time high. And, this just, again, it's not to my own horn or anything, but it's more just to illustrate that, there is a lot to be had from pattern recognition. And, we can all talk about the market fundamentals, which obviously is very important as well to be aware of, especially for sort of the longer term investment decisions, but certainly, for tactical purposes and also just to improve on general market timing, I would recommend your audience to look into technical analysis if they haven't already.
And thank you for that detail. Both people, right, in the last 2 weeks, around 10 plus million Americans have lost their jobs. But then at the same time, there are controversial hedge fund managers such as Bill Ackman, right, that really seem to do well in these volatile markets. This is what they bet on, right? This is what they wait for, recessions in volatile markets such as these, right? And recently, right, he made a $27 million bet by buying credit protection on various global investment grade and high yield credit indices, right? And this guy, right, is with Pershing Square Capital Management. And it's just interesting to see, right, how a lot of people are losing their jobs in this market, but some people are really, really capitalizing on it, right? And what are your thoughts in regards to the not only the ethics of this, but what the long-term effects could be?
Well, so on the ethics, I don't see, personally, I don't see it as being an issue profiting from a trader or hedge fund's perspective on market downturns. Look, there are these instruments available for people to make calls on, right? And I think the warning signs were there for a very long time. The credit bubble was unsustainable. The fixed income bubble was, arguably, and it's still very much there if you look at a very long term chart. And if you just think of how yields are, central bank overnight rates have been cut just to the lowest levels we've seen in a couple hundred years in a lot of instances, right? Depending on the central bank. So, look, the unsustainable bubbles that have been fueled by a lot of quantitative easing type money printing exercises, those bubbles, they're inevitably there to pop. And so looking at sort of the opportunists who profit obviously from other sectors surging, so not necessarily through trading financial instruments, but just through being an entrepreneur and servicing an addressable market. I don't see anything wrong with that. Look, if nobody's being harmed in the process, then I have no ethical issues with that. And obviously, if we're talking about medical supplies or even talking about vaccines, well, so the whole subject around vaccines is a complex discussion. I think a separate recording could be had just around sort of the debate on vaccines, but certainly it's not a straightforward issue. Anyone who thinks it is perhaps should do a little more research, just because it's by no means, I think, an overwhelming concluded discussion. I think it's a healthy one to have, actually. But when it comes to medical supplies like masks, certainly I think those companies who pivoted in that area, or whether to manufacture them or to broker them, I wish them all the best, actually.
Mm-hmm. It's just interesting, that $27 million bet made him about a profit of $2.6 billion by betting on the coronavirus outbreak. So very, very interesting, right? I think the key takeaway here is it's just interesting to see what personalities and what type of people and opportunists, right, are coming to light in regard to COVID-19, right? And to wrap up the call with the last question here, right, Darren? I want to kind of go back prior into the conversation where we spoke about gold, right? We are seeing heavy movements in gold volatility, which is unheard of, especially, during a bear market, as, it's seen as the safest option to where usually people put their money traditionally, right? And so now that we're seeing these massive volatile movements, right? Does BTC deserve the reputation as the new digital gold? Do you think how are central banks reacting to it? Is cryptocurrency and digital assets, do they have a brighter future in light of the coronavirus?
Yeah, so a lot of the central banks actually around the world have been, especially among the G7, have been exploring the idea of a central bank digital currency. And taking the lead there has been the PBOC, which has actually compelled a lot of other, call them competing central banks, to also give that idea a more serious look. And so even the U.S. Fed, even the Bank of England's former, Mark Carney, Mark Carney has recently left. They've all obviously had a really good look at the idea of a government supported initiative where existing fiat can be converted into a digital version. There already is a fair amount of digitized cash around. Just think of how we use payment apps currently with traditional digital wallets, whether it's provided by your phone manufacturer or by a company like Apple, or there are a lot of these wallets that are actually seriously taking a look at integrating crypto. And where I used to work at ICE Intercontinental Exchange, they actually have an initiative known as BACT, where they're looking sometime this year. It will be the second half, in conjunction with Starbucks and Microsoft, in rolling out a wallet which incorporates Bitcoin. So imagine you going to a Starbucks and being able to use your digital assets that way, right? So that will also incorporate at some point loyalty points, or the kind of credit or points that you can trade through playing video games. All that will be convertible and usable ultimately through that wallet. So I mean, it's coming. And with respect to what the central banks are doing, I mean, obviously what they're going to roll out will compete with Bitcoin. So although it helps legitimize the sort of the idea of cryptocurrency, but these are very different models, and we can have a different discussion around what those differences are. But yeah, just wanted to thank you again, Kuno, for giving me the opportunity to share these thoughts with your audience, and and anybody who's curious about the pattern recognition that I had alluded to. My website, tradablepatterns.com, which is just TRADABLEPATTERNS.com, has an educational newsletter where some of the content's free. So feel free, everyone, to just pop by and say hello. And my contact details are on there as well. My WhatsApp, my email address is all on there. So thank you, Kuno, for having me, and hope it was informative for everybody on board today.
Yeah, Darren, thank you so much for joining us today on Geeks of the Valley. And for listeners out there, Darren's quite an interesting personality. He has made some very successful market calls in the past, and even in these past couple of months. If you want a taste or a little bit of understanding of what he's really doing and how he's making these calls, please go to tradablepatterns.com and feel free to email him. That is Darren Chu at tradablepatterns.com. Thank you, Darren, and wish you a very safe and healthy rest of the next couple of months here as COVID calms down.
I appreciate that, Kuno, and you as well. Thank you.
Thank you.